Hey guys, good morning. Welcome to Friday. Just a couple of things I want to cover with you real quick here this morning. The first one is in regards to interest rates. As you probably know, interest rates sitting about 4.25%. I actually got somebody locked yesterday at 4.125% on a 30-year fix. So absolutely incredibly smoking rates. Clients are going to be happy with those payments if you get something under contract this weekend. Second thing is I want to make sure everybody's clear on the changes with FHA. They announced last week that they're going to be reducing the upfront mortgage insurance from 2.25% to 1%, so that's great. But they're increasing the monthly mortgage insurance. So as a net result, a client's payment is going to go up by about $22 per $100,000 financed. So $200,000 transaction, you can anticipate somewhere around $45 their payment's going to go up. So if you had a client that was right on the edge, that we were really pushing the envelope with what they could pre-qualify, after September 7th, that new mortgage insurance premium is going to take effect. So you want to get something under contract, or at least tell those FHA-approved clients that their payment's going to go up $50 or so if they're not under contract by September 7th. And then we have to pull a case number. So you have to get it under contract, get it to us, then we pull a case number, and then you're set there. Any questions on that, let me know. Last but not least, what I wanted to cover was a couple months ago, Fannie Mae and Freddie Mac made some guidance that we needed to ensure that a client's credit profile had not changed from the date of the original credit application to the date of closing. Now, just yesterday, I had a client who was right on the borderline, went under contract, told them, don't go charge anything on those credit cards, do not buy anything until we close this transaction, charged up about $1,200 to $1,300 in credit card balances. Underwriters saw the increased balances, made us re-pull credit score dropped below 620, declined loan. So, we're going to go in and we're going to have them pay down some accounts and we're going to get them rapid rescored, but, delay in closing. So I don't think it's enough that we as loan officers tell them up front, hey, you've got to stay off those credit cards. You've got to just freeze all spending. I'm putting it in my pre-approval letters now, but I really need your guys' help as well to tell your clients to just knock off spending from the date the thing is under contract to closing, especially if they're right on the borderline. If you've got somebody putting down 30, 40, 50%, then it doesn't matter. It's not as important. But if you've got somebody that's young, right on the borderline, we're kind of pushing it, help me in that regard so we don't have any of these declined loans. Thanks so much. Hope you're doing fantastic out there. If you need anything else, don't hesitate to give me a ring. Have a great weekend. Bye-bye.